Good morning, it's Market Day Report. Welcome to a Thursday. It's the final day of October. Could we see some fireworks in the markets for the rest of the day? Well, we'll have to stick around and find out. Speaking of sticking around, stick around. We've got Scott the Cow Guy Shellady coming up a little later in about an hour. And again, the Cow Guy close at 1 o'clock Central. All right, let's jump into the markets now. And the corn market here this morning is up a tick on the December at 4.11 3/4, seeing 1.5 to 2 cent gains on the deferreds. For soybeans, flash sale reported overnight, not for soybeans, but for soy meal and soy oil. Could soybeans be taking, well, some of the credit for that? Looks like it, up 7 1/4 on the November, 9.83 3/4 rollout to the March, May, and July, and that's where we find that 10 handle. And in Chicago, July wheat down 4, 607 1/2. For Kansas City, July down 5 1/2, 603 1/2. Spring wheat, well, that December is 603 3/4, down 5 1/4. And cotton in New York continues to be under pressure, 69.44, down 48, having a hard time finding buyers even at these lower prices. Ted Seifried's with Zaner Ag Hedge. And Ted, happy Halloween. Let's talk. Oh, we can't beat that. We can't beat that at all. You win.
Well, you know, there needs to be some sort of cow on these things, right? So
I love it. So I've got something maybe we can tie into that in a moment, but let's tie in export sales. And is that a market mover today?
You know, we knew they were going to be good. They were within the range of guesses, right? At both of them at like 2.3, 2.2 million metric tons. That was right in the middle of the range of guesses. And it's a really good number. Maybe not quite as good as what we saw last week, but we're seeing some good numbers. And that's exciting for corn in particular, man, because this isn't our key export season for corn. That's a lot more spread out than it is for soybeans. We need to see the big numbers for soybeans right now, but to be seeing these big numbers for corn is really kind of interesting and good, and makes you wonder if the USDA at some point, possibly even on this November report, is going to have to increase export demand. So I've said it a couple of times. I really think the corn story is getting a little bit more friendly as we get into the end of the calendar year and into spring, and specifically into planting, because I think corn is going to have to find a way to add a few acres. If you think about it, Tony, 184 national average yield, and yet we barely get to a 2 billion bushel carryover, don't even quite get to a 2 billion bushel carryover as the way things stand. To me, that doesn't seem like we have enough of a cushion for next year. What if we come up with a 177 national average yield? Then we're in a really tight scenario. So I think corn's going to have to find some acres, and I don't think lower soybean prices would do that trick. I think corn's going to have to offer the incentive. So longer term, I'm getting more and more friendly for corn. As I'm a cow, I like corn. But I don't know if we're quite there yet. You know, we're still in the end of harvest and sort of, you know, we really don't know what's going to happen with the economy and elections. And there's just too much uncertainty at the moment. I don't know if it's straight higher from here, but longer term, I am a bit more friendly corn. Now, soybeans have done really well the last couple of days. You know, we had the reversal higher yesterday. We are extending higher today so far. I think the export sales helped that. And we are trading over the short-term 10-day moving average. Really, we have not been able to close above that since the beginning of October. So if we can close up here, that'll look good for soybeans.
All right. Hang on to that picture, because we'll come back and talk cattle, and we'll also talk hogs in a moment. Market Day Report continues after this. It's Market Day Report. Let's look at what's happening with the cattle market right now. Live cattle futures are trading higher. We've been talking about it. No surprise on the October, as it's trying to find a way to match what we're seeing in cash trade, up $2 last check. December, 17 higher, 186.60. Deferreds, though, are in the red. What about the feeders? Same story there, with October higher, but November down a dime, 245.40. And the hog trade, which has been on a tear higher, giving back some of the gains. December down 40 at 83.97. Let's bring back in Ted Seifried with Zaner Ag Hedge. All right, you got the cow going there. So what are you watching in livestock?
Well, I need a hogs hat because you're right. Hogs have just been on a tear higher. I mean, we gapped higher 2 sessions ago and followed through yesterday. Today's just kind of taking a little bit of a breather. We've really gotten very overbought. So the fact that we're not really giving back a lot of yesterday's gains or the last 2 days' gains is a big positive for the hogs. Yeah, they look really good. Cattle, as you mentioned, you've got October live cattle up $2, converging with cash. You're absolutely right about that. There's only 86 contracts in open interest at this point, though. So really, we're looking further down the line. December is higher. It's good to see. Overall, cattle had the break. The same 2 days, the hogs were sharply higher. The cattle were lower. That's a big reflection of concern or uncertainty over elections and consumer confidence and everything like that. That being said, I don't know if we need to see a deeper correction in cattle. I'm not terribly worried about the economy in the short run. I'm more worried about the economy in the long run. But either way, we had the 2 day break. Yes, we are not sharply higher today, but we're treading water. I think that's a good sign. I think I like the trade that we're seeing across the board in the livestock markets today.
Okay, so the uncertainty. Next week we have the election on Tuesday, but we also get a Federal Reserve announcement next week as well. Is that on your radar?
It's all on the radar, Tony. It is all on the radar. I mean, look, we've got a whole lot going on right now, and we've talked about it. In fact, we talked about it on the radio on Friday. I mean, we've got so many things going on. It's just we can't just watch individual market fundamentals right now. And it seems like we've gotten into a time frame for the last 5 or 6 years that's been the case. But you have to have your head on a swivel, right? I mean, there's so many outside factors that can and do influence these markets on a very regular basis. We have to keep an eye out for that. And next week just happens to be 2 major inputs into the overall economy, to the global economy, to markets as a whole, to how the dollar will trade, and how that's reflected in commodities. So yes, we absolutely have to be paying attention. It has to be on our radar for next week.
Ted Seifried's with Zaner Ag Hedge. Take care, Cal. And we'll talk again soon.